If you are investing in the stock market, whether you are a long-term investor or whether you're a day trader, it doesn't matter. What I'm going to talk about right now is something that most traders, most business owners, and certainly apparently most economists don't have a clue about. I'm going to encourage you to watch this video to the very end. It is the kind of stuff that helps you make decisions in the market that are critical in the understanding of where the market is going and why. In particular, with regard to inflation and interest rates, this is right on the money. I will admit right now that I stole the headline on this, but the article that was associated with it was trash. It was just so horrible. So I completely rewrote the concept, but the headline, I admit, I missed this. I shouldn't have missed this. And now I'm bringing it to you. This is Randy Kirk. Please hit like, hit subscribe, hit notify. Lots of unbelievably good stuff coming up later this week as we go through the Fed meeting, as we get into the end of the week. And, we'll have a lot of the regular characters back, Larry Goldberg and Brian White, etc. All right. And then, of course, we are at 88. Last time I checked, we're at 88 now on the effort to get to 100 on Patreon. So if you'd like to see content that I'm not putting up anyplace else, go on and hit the Patreon thing. Right now, it's free for 7 days. And then after 7 days, it's only $5 or $10 a month, should you choose to stay with it. All right, let's get into this. The turnaround that we're going through right now, the end of the COVID reaction, the COVID interference, the boom bust, the supply chain issues, the fact that we're no longer going through that has profound effects that will be realized in corporate profits, which that will allow for lower prices. Productivity increases are always 100% specifically counter-inflationary, while inefficiencies in the market, lack of productivity, are a huge component of inflation. So what have we been seeing recently? 5 consecutive quarters of dropping productivity in non-farm business. This is huge, and this has been hugely inflationary, all right? So all the things we already know that were inflationary, the government pumping money into the system, the Treasury pumping money into the system, the Fed pumping money into the system, low interest rates that allowed people to get by with making purchases they could never make otherwise because they could get it for practically free interest. All those things were creating inflation, but inefficiency is always correlated with inflation. All right, so what specifically has been going on for the last year and a half? Let's take a quick look here, and we'll see why the Fed should be paying attention to this. Send this to your friends. Send this to anybody that has the ear of the Fed. Put this up on Twitter, put this up on Facebook, put it up everywhere, because we need this to get to the Fed today while they're voting. All right, here we go. What we've been up against is, number one, huge expenses and reacting to the boom, bust, and supply chain issues. Number one, you can't buy right. You don't know what price to pay. Some companies have limited supply and you can't, they won't even sell it to you, or they want you to pay a much higher price in order to get it. And you're competing, you're out trying to outbid other people that are going after scarce supplies. And you're like, should I buy thousands and thousands and have container loads on the ocean or have truckloads coming my way? Or should I only buy what I think I need because the prices will come down later? It completely throws off all of that and makes it very inefficient to place orders. Inventories of unfinished goods. We've just heard so many darn stories about in our own industries with government motors and Ford and everybody else with cars and trucks sitting out in parking lots that were missing one part and needed that one part in order to be completed. That's extremely inefficient, as you can imagine, in terms of the cost of capital, in terms of having to possibly rent additional parking lots in the case of automobiles, just in terms of going and getting that product again and putting it back in the line in order to add that last piece. I mean, the inefficiencies there are just glaring. Number C of this group, orders canceled. So how inefficient does it have to be? You've got the goods, you're ready to go, you've had the order, your salesman is already, you didn't sell it to anybody else, and then all of a sudden the orders get canceled because there's too much of stuff because of the boom bust situation. Extremely inefficient. Next is missed business because you don't have it in stock. I mean, again, it just doesn't get much more inefficient than this. So you've got normal customers, they're picking up the phone, they need more of it, you don't have it, you miss the business. It just doesn't get much more inefficient. Logistical nightmares with huge costs. You are overnighting things, you're 3-daying things. You're paying exorbitant amounts of money to get it here quickly or even to get it here at all, because overseas containers went from $2,000, $2,500 for a 40-footer all the way up to $18,000 for that same 40-footer. I mean, that's inefficient, massively inefficient. Plus, it was commonly sitting out on the ocean, just sitting there. You didn't have it, you couldn't get it. And then when it got in, you were probably paying money under the table to get somebody to unload yours first. I mean, huge, 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 huge. Okay, next category. Sorry, this is going to be a very long video. I really encourage you to stay to the end. You're going to learn a lot, and it's going to help you with your trading. Okay, retraining people. In fact, if you own a business or you're a general manager or a COO, this is going to help you a lot also. Number 2 category, retraining people. Companies were desperate for employees. They're hiring anybody they could find. Like they used to say, anybody, I don't know, I can't even think of the analogy now. They had, I saw sign flippers out in front of retail stores asking people to come in to be hired. I saw McDonald's offering $50 and $100 sign-up bonuses and even application bonuses. Come in and fill out an application, we'll give you $50. It was crazy times. Well, and then some people were stopping working due to COVID, just making it worse. Some were laid off in one industry and switched over. A lot of people were switching because they could get more money. So they're leaving one company and going to another for more money. And so people were desperately hiring anybody they could get. Well, that results in massive amounts of training expense and subpar employees, both extremely inefficient. The next category, hiring more people than needed due to the shortage. We heard this all over the place. Companies were overstaffed due to worries that they couldn't find new people in the case that they lost people, and they were losing people. So they overstaffed in order to make sure that they didn't get caught in that situation. And then the HR departments had a huge expense for hiring. So HR is going crazy. They're super inefficient because they're being hammered to find more people because there's not enough people. And then they're being hammered to train the people that are coming in that are sometimes untrainable or certainly harder to train than normal. And there's a lot more of them to be trained. So HR departments are understaffed, overworked, and then they're, busy trying to do the government things that the government wants done with regard to COVID and everything else. It was just crazy, hugely inefficient. Okay, then it's difficult to automate during these times. So normally an automation decision is a long-term decision. You're thinking about it months or years in advance before you make certain decisions with automation. Well, when you've got employee turnover, new trainees, and you've got uncertainty in terms of supply demand, you don't even know if you've got the product coming in, you don't know if orders are going to be canceled, you have all this uncertainty, the very last thing on your mind is automating. Now, maybe if you're a fast food chain, you're thinking about automating part of that because those are the hardest employees the last 2 years to get. But what kinds of automation are out there? You see a few things that are flipping burgers automatically and whatnot, but those are not the kinds of things you just do loosely. Those are things that you take tons of time to plan out. So no, the opportunity for automation was gone. Nobody was automating. And then everybody's so busy putting out fires, there's no time to do the planning. So that's another inefficiency, of course. I forgot in the list. Now I'm going to add it to the list. You have everybody putting out fires, and so they're less efficient at doing their normal tasking, like even developing new products, developing new territories, developing new lines, developing variations of the product, thinking about new packaging, all the things that you need to do. If you are anywhere in the stream of commerce, even the services, you're looking for new ways to sell your products in the services. A lot of stuff was shut down. You were not able to even use the methods like networking, going to networking meetings and whatnot. They didn't exist. Even now, I'm noticing that the networking thing is only beginning to start happening again, which is one of the most efficient ways to get new businesses. All right, then you had significant government imposition of rules, especially with regard to the shutdowns, but even on top of that. So part A of that is, I'm not making a political statement here. You guys, if you know this channel, you know my politics, but this is not even political. President Biden promised to reimpose the rules that Trump had ended, the work rules that Trump had ended, the rules with regard to where you could or couldn't drill. Across the board, Trump had eliminated a whole bunch of regulations with the idea of more efficiency, with increasing the economic ability, the economy's ability to be more effective and efficient and lower costs. Biden specifically came in saying, no, I'm going to get everything that Trump did, I'm going to reverse. And he did a very good job of that. And then cities and states and the country was adding all kinds of special new rules around COVID, increasing the inefficiencies again. So then you have increasing interest rates causing higher overhead. And there was no time to adjust because this was the fastest increase in interest rates in history. So you're sitting there for all these years paying 3, 4, 5% as a business owner. If you're on prime or prime plus 1, prime plus 2, you're paying 3, 4, 5%, and all of a sudden it's 7%, and then it's 8%, and then it's 9%. A lot of companies right now are paying 9% for their money, where just months ago they were paying 3% for their money, and there's no time to adjust. Well, that obviously is inflationary. You have to do something with that. You're either going to lose money, you're going to make less money, or you're going to have to raise your prices in order to take that into consideration. And there was no equity market to go to. Equities were in the toilet. Nobody was doing new IPOs. Nobody was going out and saying, oh, I'm going to float another stock offering. And if you went to the bond market, you're paying higher interest rates there, even though long term that might have been a good move. But did you see a lot of bond offerings? No, you did not, because everybody figured it was going to be transitory. So why am I going to go out and float a 30-year bond when I think that interest rates will come down eventually? There was also no time to adjust in terms of the way you do your terms. That's another way people can adjust. They can increase the term. They can start suggesting that they'll give 2% discounts in order to get the money in faster. They can start paying their suppliers a little slower, but this happened so fast, it was really hard to make those adjustments. Okay, then finally, it was transportation costs. We kind of touched on that with regard to the inefficiencies above with regard to transportation, but this was transportation costs themselves, truck expense, every kind of train expense, all of these things were higher, adding to what you need to charge in terms of prices. So you go into a situation where the stock market is then expecting companies to show worse earnings and worse guidance, and that is where we were. Okay, now what's coming? Sorry, I'm going to go through the whole list again. Stick with me, please. I promise you this is going to be worth it. Okay, number one, what's coming? Huge savings in better planning when supply chains are normal. Costs are known and they can be managed. You can now set up 3 months, 4 months, 6 months in advance. You know what you're going to be paying for stuff. Tremendously more efficient for the purchasing department, for everybody in the entire system, for the salespeople, everybody. It's way more efficient. You have no stacks of unfinished goods sitting around. That's obvious. That's going to be better. You're no longer worried about orders being canceled. Things are normal. You have no missed business due to shortages. You've got your right inventory now, and when people need it, you've got it. And now you're starting to improve your turns back to whatever they were before, maybe even better, because now you know when it's coming and you know what the orders are. So now your use of capital becomes much better because you can plan in terms of your turns rather. Okay, freight is moving normally. There's no need for expedited expenses. Big savings. Certainty allows long-term planning to optimize flows. I said this already, and optimize, therefore, turns. Turns means how many times are you turning over your inventory? Whether you're an importer, whether you're a manufacturer, whether you're a wholesaler or a retailer, everybody wants to maximize their turns in order to have the least amount of capital invested in inventory, because inventory is not only does it cost you capital, but it's also a depreciating asset. The longer it sits in the warehouse, the more likely it is to get stolen, lost, misplaced, or to depreciate because it's no longer what's the style or what's, it's no longer useful. It might even deteriorate in terms of performance. All right, so then number 2 category, retraining costs drop. Companies are not as desperate, and employees that they have are now mostly trained. They're no longer in this system of bringing in lots and lots of employees, training them because they're scared. So that's much more efficient. Some are coming back to work. We're starting to see people coming back to work, especially in the main categories like the 18 to 35-year-old, 18 to 45-year-old. Those people are coming back to work, both men and women, by the way. It's really balanced according to the numbers I saw just the other day. Layoffs are for efficiency now. They're not desperate. They're planned, and they're in order to increase the efficiency. They're not desperate because there's no work to do in the building because the ship hasn't come in or whatever. They are planned, and layoffs of that type are way, way, way more efficient. I could spend an hour talking to you about the efficiencies of planning your layoffs compared to doing them when you're desperate. Number D in this category is hiring is at a normal pace. Therefore, the HR department is not under the gun so much, and they're able to lower the costs of getting those new employees in. There's a high cost of hiring and training. Hiring alone is a huge cost for many, many businesses, and you can reduce that cost if you're not desperate. Again, the training expenses drop, obviously, and then employee efficiency increases overall since not as much turnover, and the employees themselves are not spending so much time putting out fires. They have time to do their job correctly. And then hiring more than needed, that's not happening anymore. Staffing levels are normal instead of overstaffed. This is huge. The numbers here are massive. It could be 10%, 20% of the employee overhead is dropping. It could be more than that because you don't need to be overstaffed. And then the second part of that is HR department's expense for hiring, training, managing, everything that they're doing is back to normal. All right, then long-term plans for automation can now be implemented. Everything is normalized. So now you can start thinking about automation. I am 100% sure that every company in the country right now, after what they went through with labor, with what they went through with regard to uncertainty, right now, the main thing on their plate is how do I automate so that this never happens to me again? This automation will be a bonanza. And with Chat GPT or GPT type of systems and other kinds of language learning models and deep learning models and AI, this is going to create huge efficiencies. And this was not possible until the last 7 or 8 months. And everybody's talking about it. It's going to be very, very big. No new government rules right now, other than the normal interference that governments commonly do. Interest rates are still causing higher costs, but they're now baked in. It isn't going to be from 5% to 9% or 4% to 9%. It's going to be from 9% to 9.5%. You can manage that increase because you've already got the 9% cost in your normalized profit and loss and your normalized balance sheet. So, and you can also start looking around for other methods, as I mentioned, including going to the equity market, or if you think bonds are a great deal, you could issue bonds. I certainly don't think that would be the wise move right now. That is not investment advice for companies, although I guess I'm allowed to give that kind. And transportation costs are normalized. In fact, they're way, way down. The trucking industry, the rail industry, everybody else is moaning and groaning because the amount of money that they can charge has dropped so much. So this efficiency, again, I just can't say it over and over again, productivity of this magnitude, increases of productivity of this magnitude is what's driving down costs at big corporations, little corporations, everybody right now. As their costs come down, they're going to lower prices, not because they're wonderful people, not because they just want to sell it for less. No, because their competition is going to try to get one up on them. And then they're going to have to respond to the competition and costs will come down. So we will see this deceleration in inflation, or we may see deflation. It's very, very likely. Even before we get to Kathy Wood's deflation that she's looking forward to from all of the new stuff that's coming out, that's going to help with efficiency, help with performance. Even before all that happens, we're going to see potentially deflation due to all that list of things that I just talked about. And the Fed needs to know this. They should be paying attention to this. Productivity is the driving issue with regard to inflation and deflation. All right. Be sure to check out yesterday's video about the new narrative that the stock market is reacting to and the new narrative around Tesla. It was a very important video, just like this one. Tell your friends about this one. Tell your friends about the one yesterday. I'll put a card above for the one from yesterday. And then hit like, hit subscribe, hit notify for more like this. If you want to remember, I'm doing 3 videos a day. Are you always going to see them? No, you need to hit notify so you can go, oh yeah, that one I want to see. And then last time I checked, we're at 88 on Patreon, trying to go for 100 by next Monday. So please sign up. Information down below where you can sign up for Patreon. And then you might want to buy the book, The Elon Musk Mission or The Elon Musk Method, because guess what? Lots of stuff just like this, just like what I just went through in detail, in depth, going into the weeds. A lot of that stuff is in every one of the books you see on that table. When Friday Isn't Payday, it's been out since 1993. It's in its 3rd edition. Inc. magazine called it the very best book that was written that year for small business. Making money out of thin air, lots of stuff like this, lots of ways of getting into the weeds, understanding how to read a P&L, not just your own P&L, understanding how to read Tesla's P&L, or Apple's P&L, or NVIDIA's, or whoever it is that you might be following right now. So pick up a copy. We've been selling a ton of making money out of thin air the last a couple of weeks. I don't know, all of a sudden it just caught fire. You may want to get yourself a copy. All of these books are available as audio. They're available as paperbacks. Or if you want to buy them cheap, man, they're like $3, $4 or $5. You can get them, of course, as Kindle. All right. I think I've done it. I think I'm done with this. It's really been great talking to you.
Click the link below to get your paperback, Kindle, or audiobook now.